And happy Monday, hashtag Team Tackle to our community. We are now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we go live and we take a look at these markets one step at a time, looking at stocks, commodities, individual companies, broad indexes, sectors, talking about the economic data, the stories of the day, breaking all the news down so you guys can better run your daily routine. And welcome back to our community. If you are a veteran, you know what I'm going to ask for right now. A thumbs up on the show to help us get the word out. Good conversation in the chat like you guys always do. Love watching the chat back and forth. And then hashtag Team Tackle. It's our official hashtag. Let's get the show started off on the right foot. And if you're brand new to the channel, we do this each and every day. The markets are live at 12:30 p.m. Eastern. Click subscribe, click that bell, come back and join us on a daily basis. Monday mornings, obviously always you get up, see what the markets have done over the weekend. You start preparing yourself for the week ahead, adjust trades, you get yourself ready and going and looking at the big picture. And that's what we're going to do here like we do each and every Monday. I've got Coach Mark and Coach Matt to join me as they always do. Start with Mark first. Mark, how you doing today on a Monday, sir?
I am in a good mood. I am in a good mood. So I don't even know if there's a reason. I had lunch with my son on his birthday on Saturday. That started the trend. But yeah, I love when the market opens for the week. Excited. Got a full week of action ahead.
And Matt, how are you doing today, sir?
Doing fantastic. Excited to be here with the crew to break down the activity. And wow, stay with us all week because there's going to be a lot to talk about this week in the market. It is a big week in the market.
You mean you're not going to have to create filler content this week?
I don't. You know what? You never know what you got to do by Friday afternoon. But going into the week, I mean, the amount of earnings we got this week, economic reports, you got the Fed on tap. It's a massive week, and definitely stay with us throughout the week as we break down the activity in the market.
170 some odd S&P 500 companies are going to be reporting earnings. We got an FOMC meeting starting on Tuesday with a press conference and a policy statement on Wednesday. Advanced GDP. We've got PCE inflation data. You name it. We've got a lot going on. Obviously, there's still more infrastructure talk. I hear the senators are talking about drafting some kind of bill to move that process forward a little bit. So there's all kinds of things in the news this week. It's going to be hot and heavy, no doubt about it.
Oh, and then I didn't even mention the U.S. political infrastructure talk that's going to be a little bit, there's going to be a lot of hot takes on that one this week too.
I'm sure there's plenty of
hot takes on that one this week.
Let's start with a simple take and start reading the market here from a technical perspective. I got you on the 5-minute chart, and obviously we had a series of higher pivot lows, higher pivot highs as we're developing up this chart. What are you seeing here technically, Matt?
Well, I'd like to, when we come in here on a Monday morning, obviously the stock market just opened up for us in the U.S., but, at Tackle Train, we like to look at the futures, and obviously the futures opens up on Sunday. And so on Monday, I'd like to look at the futures action on Sunday to see if we can, just give the market some context coming into the Monday. And as you can see, when you're dealing with the futures market or the Forex market, it really is a 24-hour market. And that 24-hour market is centered around when these big banks open up from around the world. And, the first banks that open up are the banks in Australia, New Zealand, and then in Japan right here. And you saw a little bit of a downward drift once the Asian market started opening up. And a lot of that is due to the Chinese news that was coming out over the last 24 hours. That was a continuation of the story in their secondary education, with regulations on DD and whatnot. We'll get into that here in just one sec. But when you look at it from a technical perspective, you see during the Asian market hours, the S&P 500 is, trading down. European market hours are right here, and it got a little scary, a little hairy right here on the European market hour open, selling fairly aggressively. Finds a bottom, though, right when you start getting a couple of economic reports that came out of Europe, start finding a bottom. And ever since then, it's just been a series of higher highs, higher lows as you recovered this Asian market price drop. And now you're looking at a technical scenario here in the stock market where you're looking at a bullish retracement on an intraday. And the reason I wanted to start on this 5-minute chart is because you're testing a couple key levels from an intraday perspective that I find
Mhm.
interesting, and that's that 44.05 level right there, 44.06 right here as you're testing that on that 5-minute chart. Just really kind of interesting for me. But that's the path to the doji we got here so far here today since the cash open.
Path to a doji. I like
Path to a doji.
when you can map out a path towards a doji, but this doji is actually happening right
It's
near
kind
the
of a
all-time
hammer
high.
doji, though.
Not a bad little doji. Not a bad
And if
little
that
doji.
and if that bullish retracement does confirm, it could be a nice little hammer candle by the end of the day. But a little stabilization coming after the cash open. Could have got a little hairy there during the European market hours, but found a bottom, and now we're, like I said, path to the doji.
Well, and let's have a broad conversation about a couple things you mentioned here just now. We're going to have a very, very busy week of earnings and FOMC policy meeting on Tuesday and Wednesday. The S&P 500, that broad index that measures everything, a reflection of the overall stock market, obviously still very healthy heading into all of this anticipated news. Matt, what are you most looking forward to? Are you looking forward to the tech earnings? Are you most looking forward to a Fed statement, getting some of the economic data like GDP numbers that we know is going to be really strong? What are you most looking forward to this week to understand more about the markets from?
Well, typically speaking on Fed week, the thing that I'm going to be most anticipating is the what the Fed says, and then obviously the secondary reaction to the Fed policy. Usually that's hot and heavy. And it usually lasts for a good 24 to 48 hours following a Fed meeting. Price response can be a little bit volatile and take some time to stabilize. But on a week this week where, from a political perspective, you're talking infrastructure and the debates that are happening over the bipartisan $1.2 trillion infrastructure deal versus the budget reconciliation $3.5 trillion infrastructure bill, which obviously has traditional infrastructure type things in it. That's going hot and heavy this week. You got an economic week where you're looking at advanced GDP coming on Thursday. You get some PMI numbers and consumer sentiment numbers on Friday. Typically speaking, I'd be really, looking at that advanced GDP number. And then from a stock market perspective, you're looking at a week where, you're basically staring down the barrel. Just think about these names I'm going to list here for a second, okay?
It's like the 27 years.
I'll give you 27. In technology, you have Apple, Microsoft, Shopify, AMD. In discretionary, you have Amazon, Tesla, Starbucks. In comms, you have Google, Facebook, Comcast, Spotify, Pinterest. In industrials, you have UPS, Boeing, 3M. In Lockheed Martin. In finance, Visa, MasterCard, PayPal. In energy, Exxon, Chevron, Valero. Basic material, you get your chemical week with Lynn, Sherwin-Williams, and Ecolab. Staples, Procter & Gamble, Bud, Altria. Healthcare, you get Pfizer, ABBV, and Merck. In healthcare, in utilities, you get Southern Utilities. And then in real estate, you get American Tower, Equifax, and DLR. That is a murderer's row of stocks coming at us this week from an earnings perspective. And so, Tim,
Matt, if you had to read every ticker symbol, that's what the halftime show would be today that is reporting this week. That you just read ticker symbols.
Like literally, it's just, and so on a week where you have a lot economically, politically, and then staring down the barrel at all these different earnings, which one am I most looking forward to? Maybe more hot takes on China-U.S. relations. I kid. No, I think for me, you got to start with what's driving the marketplace over the course of the last month or so going into earnings. And that's the big dogs of the bunch. It's the Apples of the world fighting an all-time high breakout. It's Microsoft turning and burning over the course of the last quarter. It's it's the Googles in comms doing the same thing. It's Amazon, fighting off that bullish retracement against the all-time high following a breakout out of consolidation. There's a lot that's happening in the marketplace, but I do think the analysis starts with the leadership in the market over the course of the last 2 to 3 months. This quarter has been driven by the big stocks, those FANG type stocks, the big money market cap stocks. That's got to be the story this week, and that's what all the eyes and all the attention is going to be on this week. The market is going to move based on the price response out of these major stocks this week. Everything else, to me anyways, and it's not that it's not important. We're going to cover all of it here in the halftime report this week. But to me, the story's got to be these stocks and their earnings reports this week.
Mm-hmm. Mm-hmm. Mark, what about you? I mean, how would you answer the same question? What are you
Dude,
most
for me,
anticipating?
and I talked about this on the Sunday prep class, I am fascinated about big tech's earnings response. We've seen, echo a lot of what Matt just said, but we've seen over the last year that tech has sometimes had some run-ups into earnings. Select companies certainly. Price response, no matter what the earnings said, the price response hasn't always been there. When the strength of the market right now is tech from a short-term perspective. What is the market in the mood for on the earnings? That is for me the most fascinating thing this week.
Well, and Mark, this is tech in the quarter.
Yeah, heading into earnings.
That's tech in this quarter. From the lows to the all-time highs, they got to perform this week for this to continue. And so, yeah, everything is going to have, there's going to be hot takes politically, geopolitically, economically. All of that is subjective analysis. We got to see these companies report earnings this week, and I'm excited. I'm excited for them. I think they're going to. I don't have any doubt that they're going to be blowout earnings, guys.
Yeah, we know that already. We know that already.
What's the price response?
Mm-hmm.
What kind of mood is the market in? It's going to be very telling, I think.
Well, and you highlighted a couple of stocks. I mean, and you're on the tech chart here, but Apple and Microsoft, they've had tremendous quarters. They're up near at all-time highs. How their price response comes in is going to be the curious part, because we have seen these companies are beating and beating and beating and beating across the board. 87% of companies have beat estimates so far.
Don't you shortchange it. It's 88.
Is it 88? Oh my.
It's 88.
It'll come down. It'll come down over time. You don't.
Well, and specifically regarding earnings, we do have 24% of companies right now that have reported in the S&P 500. 88, like you indicated, are beating the EPS number, which is towards the all-time high there. But a number that is very, very impressive, start seeing it last quarter as well. It's continuing this quarter. 86% of companies are beating the revenue guidance as well, which is and again, typically speaking, this is how it goes, guys. We start in those high 80s. We fade down. They stayed strong last quarter. Can they stay strong this quarter? That's an open question. So far, they are passing that. But the key, a key metric that I like to look at from a growth perspective is called blending earnings. Mm-hmm. And when you're looking at blended earnings, it takes into account the 24% of companies that have already reported earnings. It takes into account the expectation on the other 76%. And right now, you are seeing a 74% growth rate in blended earnings, which is not 74%, but a 74% beat. Those are really important numbers. Growth looks fine right now so far through earnings season.
It's fascinating. I mean, it's a lot of real strong numbers right there, quite frankly. Yeah.
One of these times, one of these Mondays, maybe after earnings is done, I'll do a complete detailed assessment sector by sector, because real estate has had a very good start to the earnings quarter so far.
Really? Yeah, I would be fascinated with that. So I think that'd be definitely valuable. Maybe in 2-3 weeks when we get through the.
Yeah, I'd say well, right now it'd be like, okay, we can get a detailed assessment of finance and nothing else so far. You got to see all of them get through to see those final numbers. But I do think maybe a mid-year, because this is the second quarter reporting, so mid-year review sector based from a fundamental perspective. Yeah, maybe I'll do a deep dive on that. I love getting into numbers in detail like that. So yeah, I'll definitely do it for the halftime report.
That'd be valuable for sure. Let's flash through the indexes if we can here, Matt. Obviously, the S&P 500, very, very strong. We're going to look at sectors like we do each and every Monday, talk a little bit about the rankings, I should say, that we updated over Untitled Trading over the weekend for our newsletter. The S&P, very, very healthy. Tech is very, very healthy as well. The Dow still knocking on the door. The Russell still underperforming. What are you seeing in these indexes, Matt, from a relative strength and weakness perspective?
Well, like I said, you've had a little bit of a volatile, Sunday to Monday open, a little bit down coming into the week, recovery following the cash open here. Looking at the other indexes very quickly, when you're looking at the Nasdaq, you're looking at a very similar picture, obviously front running the S&P just a hair there. Taking a look at the very economically sensitive Dow, we're still clinging on, fighting up against that 35,000 breakout right there. We're all looking at that tick. That tick's important, and I love that debate. Is the tick or the body important? This has been important the very second it happened because of the 35,000 number that it just kind of was a magnet to. You look at this from an intraday perspective, look at that 35. It tried on Friday, couldn't do it. It's making the attempt yet again. Not part of me, a lot of me hopes that we just consolidate throughout this massive week and then break out next Monday. But like we talked about last week, whether it breaks out this week, next week, the week after, eventually 35,000 is going to be broken out. And it doesn't need to come from me. That's obviously a trigger here. Specifically 35,000, you guys both interested, I'm assuming?
100%.
Well, I think it's a psychologically, because we've seen rotation in tech, right? We've seen rotation into, elements of that into some of the defensive areas of, growth and defensive. The Dow's so cyclical sensitive, right? A lot of big cyclical names on there. I think it is I think it's bigger than normal if that were to occur, right? Big if, right? Resistance is a reason. But to get cyclical participation, because tech can't carry forever, has for 12 years, but it can't do it every month. Got to take some time off. If you could get some more broader participation, that market breadth wouldn't be so bad. It would be a very healthy thing for the market.
I think that's fair. I don't need any of that. It breaks
I'm still stuck on tech can't carry forever. I'm not sure.
That's also a debatable point.
20 years from now, I'm not sure.
Yeah.
I've been watching a lot of Star Trek, so I'm on that tech bandwagon here. But no, I think everybody's got to be looking at the Dow 35,000 breakout. It's one of those psychological barriers, and obviously the market from May on the last 2 months has shown you that it does care about 35,000. Yeah. It's going to be a volatile week, but that's got that key technical data point has to be watched. And then, Tim, just to kind of answer the question to a conclusion, the Russell 2000, I like support building long-term here, but short-term, you still got a lot to fight up against. And unlike the Dow, you're in the middle of the range. The Dow's fighting up against a breakout after an increasing support level. Mm-hmm. Russell 2000's got a lot of work to do. Stay bored here. Cash flow condors has been doing absolutely amazing for 6 consecutive months. It's good as long as it stays neutral. I don't have a directional take on it, quite frankly.
It's been a wonderful condor environment, no doubt about it. Those wings are flying in such a good way. And as we're on the Russell, it's been underperforming. It's a good transition into our sector conversation here today. We'll talk China a little bit right after that, and then we'll get into some commodity stuff just right after that. But Matt, we always do look at the sectors each and every week on Monday in preparation for the week with hashtag Team Tackle out there. The cyclical nature of the Russell, the smaller companies, the energy components, the financial components, those sectors have been downgraded recently at Tackle Trading. About 3 months ago, they were up near 10, 15, 20 yard markers. Now financials, industrials, materials, and energy, there's some relative opportunity in there, but we've moved them more towards neutrality. Let's start with cyclical if we can here, Matt, and give me a read on what you're seeing in the sectors right there.
Well, let's take a quick peek at the cyclical areas of the market. And like you indicated, you got the industrial sector, you have the basic materials sector, the financial sector, and then you have the energy sector. So let's take a quick peek at them technically here. Industrial sector, we have a ranking right there at about 35. A couple things we do like at Tackle Trading about this sector, and you are seeing a little bit of the Dow doing the same thing. Obviously, the Dow is a little bit more of a broader collection of stocks, but when you're looking at the industrials, you're fighting up against a right shoulder breakout right there at the 104 level. Very easy trigger to look at. What you like about it is after this drop last Monday, good recover, got back above all the moving averages, and then towards the second half of the week, played a lot of defense right there on those moving averages as you threaten that breakout. Never really got choppy above the breakout channel. Stayed right underneath that 104 breakout channel. Very clean above 104, and 104 should see price appreciation back up into the highs here at about 106. A breakout in industrials does not change the intermediate trend, given the fact that you do have a double top, double bottom scenario at 106 by 100. But what it does do is it changes the dynamic of the short-term trend with that breakout. That's why you put that price appreciation into the 106 and not above 106. But that does look like it could happen here, and so definitely keep an eye on the industrial sector. But maintain that 35 ranking there. Looking at the financial sector, maintain that ranking right there at 40 over the week. Pivot confirmation is really kind of consistent here at 35, right underneath the 50-day moving average, right there at about 37 as well. Short-term consolidation, unlike the industrial sector, which got back up into resistance, this kind of stabilized in the middle of the range here in the financial sector. Is going to have a little bit of a chance this week with Visa, MasterCard, and PayPal all reporting earnings, which could see some price appreciation. But once again, got to see it first. When you're in this neutrality here, a lot of times you got mixed data that's causing the neutrality. So we definitely need to see some type of breakout before you get some directional exposure there. Moving on into the last two areas of the cyclical areas of the market, basic materials as well as energy. Basic materials quietly having a very decent earnings report season so far.
It really has, hasn't it? It really has.
Now they still got quite a bit to come, but they've had a fairly decent start. Going to see if they can continue that decent start to earnings with Lynn, Sherwin-Williams, Ecolab reporting earnings this week. Technically here, you did break up above those moving averages. That would be a bear stop out type pattern as you fight back up into these resistance channels. But outside of that, I really don't have anything to really kind of read here technically until we start to see some degree of consistency in patterns and trend analysis, which we are just not yet there with the basic material space. And that's reflective in our ranking at tackle trading in the materials right there at that 50 handle. Real mixed data, earnings coming out of the chemical space, maybe a little bit of clarity coming out of gold this week as it continues to fight let's go to gold real quick, fight that 1800 support level a little bit. Maybe that helps, maybe it doesn't. Stick with us throughout the week to solidify that, but that's what you get when you get a 50 ranking out of the material space. It's a little bit of a battle and a little bit of a wait and see from us. And then finally, looking at the energy space, energy's got some big names reporting here this week as well. And what I like about the energy space here technically is you see this support level. It is subtle, but it is important to me. And maybe I'm overreacting to this a little bit, but I see that little hesitation here as a failure to confirm down. You see the bear stop out here today, fighting up against that 50 technical resistance level. I'm starting to like energy a little bit more. Maybe another week, maybe see some stabilization coming out of the leadership in the energy space with Exxon Mobil here reporting earnings this week as well. Exxon Mobil, look at that 55 handle, fighting over that 55 handle. Intermediate neutral trend, short-term downtrend. Let's see if we can stabilize there around that 55 handle. Same thing when you're looking at some of the other big leaders in the space. Chevron hitting that 200-day moving average, fighting up against that 90 MA, breaking back above the 100 handle, which was an old resistance pivot. And so the energy space, although has fallen out of favor quite a bit, both from a price action perspective, but guys, that's all a lot of us were talking about in this run up here. Sure. It's fallen out of favor here. I think it comes back a little bit as these energy, obviously got to wait for Exxon and Chevron here, but you're seeing a little stabilization towards the lows. I do think that's something to keep an eye on this week.
Appreciate you running through some of those sectors. Obviously, with the cyclical nature of them, they were the ones that we had brought down more towards neutrality. Industrial is the most healthy for a potential breakout, which is why I got the highest rating. We're going to get a lot of data and information through the growth areas of the market this week as well. And obviously, that's where a lot of the leadership is. We do have leadership in healthcare as well, which is having a little bit of a down day on a Monday, but a really great week last week. What about tech, communications, discretionary, some of the growth components here, Matt?
Well, and that's, I mean, outside of healthcare and maybe real estate, the sectors that have been the best performing sectors for the quarter, and over the course of the last couple months, as you've seen, money flow out of the cyclical areas as the cyclical areas stopped really driving together based on the economy reopening up theme and so on and so forth. Don't have to finish that statement. I said it so much for like 8 consecutive months. But ever since that point, you've really seen leadership out of the growth areas of the market. And I remember a couple months ago, Mark, I can't remember what day it was, but I do remember there was a moment a couple months ago when cyclicals were losing that shine, and it was losing a unified theme. And we were having a discussion. I said, well, guys, whenever the market gets confused, it bets on growth. And ever since that point, the growth areas of the market have been the most consistent trends, consistent patterns, the areas of the market that you trusted the most from a technical consistency perspective. And so comms, let's not start with comms. Let's start with the leadership in this space, and that is the tech space. The box I drew was the box I was showing you, the visual identification.
That's a big box.
It's a big... change the scale and it looks a little different, but it is a big box. But that has been the leadership of the marketplace. And so when you're looking at tech's got a big week in front of it with Apple, Microsoft, Shopify, AMD, specifically the names that are going to be driving tech here. Broke out after a support bounce last week. Can it continue this? That's the open question that we have this week in technology. It is ranked right there at 15, 5-point upgrade last week. Love the fact that it held support on the 20-day moving average, continued, broke up above every intraday high. And once again, you're finding a doji following a breakout on Friday. So there's nothing really too concerning to be looking at in tech. The storyline obviously is going to be earnings driven this week. So stay with us as we break down Apple, Microsoft, Shopify, and AMD later this week. Moving on to discretionary, very similar to the tech space. Saw the continuation last week after the failed breakdown on Monday. Every single day, just higher highs, higher lows from an intraday perspective. You can see that fairly clearly on the 30-minute chart. Every single day, higher highs, higher lows. Today is no different from what we saw last week. That is continuing here today, and that is on a day where you are breaking out officially in the discretionary space. You don't need me to say this is an overextended breakout. You can see that from the technical response here. But one key metric that I do like to look at from a breakout perspective, and I am seeing a little divergence here, is the RSI. RSI is still at 57, shows a lot of room to grow back up. I got this overextended technically coming into the breakout. You're up 5 days in a row. That's big price movement coming into a breakout, but there is some divergence on your indicators. RSI says we still got room to run here, and who am I to disagree? If Amazon, if Starbucks, and quite frankly, Tesla today, if they have good earnings reports, you could see some movement here in the discretionary space. So once again, you're gonna see that from me a little bit here today on a week that has as much news as this week does. But again, stay with us all week as we break down the hot and heavy action in the discretionary space. You gotta like this intraday data coming into the breakout though. Very consistent, higher highs, higher lows. Once again, breakout channel at 184, broke up above, and you're at a no sell day. Whereas a lot of the market showing a little bit of a doji, strength in discretionary a little bit coming into early Monday price action on a hot and heavy week, Tim.
So our growth areas, obviously, they have a lot of the strongest rankings, and you're seeing that in the charts as you're breaking that down. Appreciate that, by the way.
Well,
Cyclical areas
it's not
time.
Yeah, they definitely have the strongest rankings, but consistency, volatility. Our rankings is not an exact science. There is some subjective nature to how we read technical analysis. But I can tell you personally that the consistency in analysis does play a role in it. And so, yeah, I do think that because of the consistency in trends and patterns and so on and so forth, from a technical perspective, simply put, the growth areas are the most consistent areas right now.
Yeah, they've been the most consistent. Anything on the defensive side you want to highlight before we wrap up our sectors?
Very quickly, the defensive side of the equation saw a couple upgrades. First and foremost, the leadership in the defensive space is healthcare. Healthcare broke out of the 129.50 level last week, got a little bit of a higher high, higher low scenario. Is this the higher high? Looks like we're going to do a little bit of a Cody special snapback, come back up into that 130 handle. That's the only thing I'm keeping an eye on. But healthcare overall has been fairly healthy very recently. And then the utility space, we discussed this a little bit last week as well. The utility space has a lot of mixed analysis here. Intermediate, from an intermediate trend, it's very mixed. But when you kind of highlight the short-term analysis, from the point, Greg was on the halftime report a few weeks ago, and he was in his segment on Thursdays. He brought in 3 utility picks, and what he was looking at was this rounding double bottom here on the 200-day moving average. It's choppy, but ever since then, you've had a double bottom, double top, breakout, higher high, and now just recently, again, volatile, unlike we're seeing in some of the other sectors. But from a technical perspective, what you did see last week is a bullish retracement that came into a known support and resistance level right around that 64.5 to 64.75 level, held in that support channel, increasing its volatility to the top side. I think that justifies an upgrade there. And so we did upgrade the utility space. Utilities, the only thing you really got to worry about this week from an earnings perspective is Southern Utilities. Consumer staples fighting up against a breakout could occur this week. And if it does, there is safety in staples. And then the last one is real estate. And quietly, real estate has had one of the better earnings seasons so far to date. American Tower, Equifax, and DLR is going to add to that storyline this week.
Fantastic. As always, appreciate you running through those sectors. It helps us get ready for the week on a Monday, Matt. So as well as always, appreciate it. Let's move into commodities next. And Mark, crude light had a really volatile week. It dropped precipitously on Monday. It fired back throughout the week, had a huge day on Wednesday as well, bringing it back up above 70. Now we're just fighting some intraday levels and some congestion. What is your read here on crude light?
I think you're looking at a consolidation, sideways. That is not a bold call in the world of commodities, right? You blindly don't look at a commodity chart for a year, come in as an analyst and say, I'm pretty much expecting consolidation, choppy action here. You're probably right 8 out of 10 times doing that blindly. So, that's the nature of commodities, take runs, trade sideways. And that resistance zone, which we highlighted several times, nice violent slap down as the whole market, not just stock market, but the market's got a little jittery at the end of 2 weeks ago, last Monday. Price begins price, big sell-off, but a pretty strong rebound. But I think you're looking at choppy prices here. I think that is chalk right here in a prediction.
Trading at 71.69 here, Matt. That's still about $4 or $5 below 75 to 77. Do you see any upside here in crude oil, or do you have the neutrality that Mark is seeing as well?
No, this would not be the first time we witnessed a 65 to 75 neutral range in crude.
I was just thinking the same thing myself. $10 range is not uncommon for crude oil.
Not at all.
Not at all. All right, gold next. Here we go. And by the way, there's a couple of action. There's a little bit of action in the metals market today. It's not in gold. Gold's at a doji sitting at $1,800. Anything you guys want to add on gold? Nothing. Look at copper breakout.
The only thing on gold.
That's the story.
I'm just interested in any algorithmic response on gold on Wednesday. That's the only thing I have my eye on gold this week.
Yeah, but even that, I don't know. I'm not even sure that impacts anything. Well, it's gold.
Oh, no, that's just from interest from the popcorn bleacher seats, as Tim liked to say. So.
Fair enough.
Oh, yeah, I have that interest. Technically, no, it's gonna take a little bit of time.
Yeah, but this copper breakout, you don't got to wait till Wednesday, Marky. It is happening here today, and it was developing for a little bit of time here, Matt. Obviously, really healthy close on Friday, breaking out then, extending the run here, 4.5%. It's a beautiful looking chart, beautiful looking move after quite some time where it took it off, Matt, and really compressed and consolidated into that triangle pattern there for about 2 months. What is your read on copper? And now that we are blasting off, what do we got left of the chart we got to consider?
Well, listen, and I think both Tyler and I on our Discord trading labs this morning, we're like FCX, copper, there's something here because you're going to see a lot of strong movement in a lot of areas of the market, right? But you did see that in copper, you saw that in Bitcoin, which I'm sure we'll talk about in a second. And so your eyes immediately gravitate towards decision making in those areas. It depends on your time frame here. From a daily chart, it's actually a pretty beautiful breakout of resistance, as you mentioned, started last Friday. You're seeing continuation, and I'm seeing like in the commodities sewing circles, they're like, well, there's floods going on in China, and that can influence industrial. Yeah, and we also had a breakout on Friday. Whatever causality you want to attribute it to today, that got in motion on Friday, and you're seeing follow through. Resistance zone. Known resistance zone, pretty broad, just south of 5, between 475 and that. And so, you're running up hot and heavy into that. So I wouldn't be surprised if you see some hesitation, but very healthy chart and producing nice technical setups. I mean, I looked at the FCX chart because, first I look at the commodity, I do my secondary analysis on the individual stock, and there's some variances. I was like, there's a lot of ways. In which to play this. Like if you wanted to play this, a lot of setups that could occur in the coming days. And so I was just like, my eyes screamed Bitcoin and copper this morning. It felt like it was December of 2020 all over again.
Well, I'm going to throw a little cold water on both those. Don't get me wrong. I appreciate the analysis that's leading to the price appreciation in Bitcoin today. And I do appreciate the copper breakout, but I think you need some time for these to set up, quite frankly. FCX has mixed data. I like it, but I don't like it any more than I like any other chart that came into the 200-day moving averages, now fighting right shoulder breakouts. Regarding copper, yeah, I do like the constructive nature of the copper chart, but let's not mince words, guys. You're chasing the dragon after 5 straight days up in copper, coming into very well-known resistance levels at 466 and 475. So I think you're momentum trading copper, and that's it right now.
Yeah. Well, and FCX is the popular vehicle there. And I'm glad that both of you brought it up and brought that chart up for me. And I own FCX.
Well,
it's been a covered call play.
And help me out with this, because you were talking specifically towards cash flow strategies on FCX, correct, Mark?
Yeah, well, see, it's like when we were talking CSI a few weeks ago.
Like but can I ask you a very specific question?
Yes.
Is there anything different today that you weren't seeing in the last couple of weeks that would have changed your philosophical viewpoint on those cash flow scenarios with FCX?
Just the upward momentum in copper providing additional stabilization. So that would be the fundamental change today. FCX is FCX, commodity prices relatively high regardless, but the additional movement in copper today, copper might not go to the moon, but it could leg higher, which is supportive of stabilization near support levels.
I just want to clarify that, because the way you phrased it, you were seeing directional opportunity, but I don't think that's the case.
You don't go to me for directional analysis.
Well, I just wanted to clarify that, because words matter.
Yes, words do matter. Words matter.
And when you're talking cash flow, you're lobbing grenades here, right? You like the upward movement in copper because that increases your floor analysis on FCX.
Correct.
Right? It has nothing to do with the top side.
Correct.
Okay, I just wanted to clarify.
Yeah, I think the top side is really only in play on FCX if you break out of that pivot.
Top side's dirty.
Moving average.
Top side's dirty right now on both FCX.
I like
and
that
copper.
phrase, topside. I like that. You know, I'm going to steal that. I like that.
You like that. Right.
I do. I like that.
Listen, words matter, and I make them up all the time. Take whatever you want.
Take it.
You know? Topside.
Topside. I like it too. All right, let's keep moving through.
Can we just keep the top sides dirty?
The top side.
I love that. I mean, seriously, the top, because once, the first time you hear it, you'll be like, what are they talking about? But once you hear it and know what it refers to, I mean, that's all you need to say, right? Top side's dirty, you know?
Mm-hmm.
Top side's dirty.
Top
what does that mean?
Dirty.
It ain't clean.
You got messy pivots and moving averages and congestion and a billion other things. Yeah, there's
whatever the opposite of Apple's clean 150 breakout or the Dow's 35,000 breakout, whatever the opposite of that is. Top side's dirty.
Those are top side clean.
Yeah.
All right, let's keep moving through here, guys. The dollar banged its head up and near resistance. It's obviously hesitating. I got nothing to add to the dollar till we talk.
This is what I care about. I'm taking it off my main watch list.
Taking it off the watch list, dropping it down. All right. Bitcoin, though, we do got to talk.
Wait, that's a moment. Did you just took it off your main watch list?
Listen, I don't even look at the dollar every day anymore. It's gross. Why do I want to feel?
Is that the first time?
I look at the dollar and I want to go take a shower. Like, no.
Dude, listen, I need something to get a snack. You need to find a new subject.
You can just bring snacks to your desk.
I don't like eating in front of people.
You can push pause or mute. You could bring a snack to the desk. You don't have to wander outside where we don't know where you are. Say la vie. Inside baseball. All right, Bitcoin.
Does he think we don't know he gets snacks? Like, is this some secret when Mark goes off camera? He's not getting a snack?
Well, okay, I don't want to take the joy away from Mark's snack time. I mean, don't get me wrong. I want to support.
Listen, I need my nap time. I need my snack time, dude. I'm going through the circle of life.
Dude, you're like a 7-year-old kid at preschool.
Yep.
All right. Two last stories, then stock talk here. Let's talk. Actually, two of the bigger ones here in terms of financial news media reporting on them. Bitcoin next. Let's take a look at it. BTC, and BTC is having a huge day after a real big carry through, and it's a
big day.
It's a no sell day here, Matt. The top side here, Mark, is probably still a little choppy and messy. If you look left,
top side a little bit dirty. It's a little bit dirty, It's
exciting for the first time.
It is. You guys are going to bastardize my top side conversation too. It's not even going to make any sense anymore.
Mark opted it. It's not.
He did. It's not even mine anymore. We talked on Friday as well as Thursday as well as Wednesday regarding the resistance levels on Bitcoin. And I remember asking Coach Tyler a question regarding, which one he felt the most comfortable with, given the fact that you're fighting through a lot of left side resistance. Obviously you got your moving averages here, but we were looking at that 36 handle right there. And then the obvious one is 40 to 41K that you see on the pivot points right here, and then obviously all the way back to January of this year as well. 36,000 didn't even it wasn't even resistance. I had some World War II commentary that I'll say for the podcast on
I heard the joke in my head.
Yeah, I figured you did. It was that level of resistance, but didn't really stand a chance here. And then obviously the quick price appreciation between 38 and 39 here. Very aggressive, hot and heavy. Now the fun begins, in my opinion, now the fun begins because reclaiming 36 just lines up for me that potential 40 to 41K breakout. I think you're now looking at this as, you're looking at this saying positive towards Bitcoin, positive towards those secondary type plays in the Bitcoin world. And obviously with the news that Amazon is looking to accept Bitcoin at some point in the future as a form of payment. That was obviously the catalyst that drove this here today. But now I think the fun begins because now we're talking about Maybe we get an increasing support level at 36. I think that's interesting. I think a high base between 39 and 40 is interesting. Today for me is not a triggering action because number one, you probably missed that quick 15-minute window you had for any day trade above 36. But the real fun begins from a trend perspective, and that really starts with that breakout. Now we talk about support and patterns forming. I'm interested in Bitcoin, not today, but on the secondary technical pattern that could develop here.
And that's so key. As someone with exposure to Bitcoin proxies, they actually represent the biggest percentage of my portfolio. So I already got exposure. So but looking to add any new exposure, those support patterns that are going to develop or not develop in the coming days is going to be fascinating to watch. I mean, Bitcoin's been boring in many aspects. The most exciting thing's been, does it break down here and create excitement? Mm-hmm. I think from a sentiment standpoint, I think this Amazon rumor thing can juice some wheels, if you will, from the because we've talked about in recent weeks retail participation way down this summer, right? Is this something that can juice some sentiment wheels and those patterns that form in the coming day? It's going to be an exciting week in Bitcoin. Like we needed anything else this week to focus on, right?
Yeah, we couldn't have had Bitcoin just hang out for 1 week, one more week. No, I kid. Obviously, increasing volume here today off that Amazon news. For me, I think it does shift the bias towards right side of the scoreboard type analysis, but I don't believe you're in bullish territory yet. I think for me, it's a secondary pattern here that's important here. I think we've been waiting for so long. What's wrong with waiting for a secondary pattern?
And Matt,
here?
There's so many situations like this in my trading and as I teach that I'm like, listen, the biggest worry you always have is that something V shapes, and sometimes it does, or explodes, goes parabolic, whatever phrase, because we're beyond V shape, but a parabolic move. And I have just accepted in my life. Yep. I believe in technical analysis so much, and I'm going to have umpteen opportunities from now to the day I die, because I'm going to be trading every day in between now and then, because I genuinely like this stuff, right? It's fun to me. But I'll miss out on those. I'm fine with it. I accept it, even on something I love as much as Bitcoin. Now I have a little existing exposure, so at least I'll make some money, right? But I mean, just give up the parabolic move potential. Day traders, that's one thing, right?
Listen,
and you get everything else.
Okay. I'll miss every V-shaped recovery in my life. I just will.
Just not you.
And that's fine. Mm-hmm. And the only time I got upset with it was right here on this movement post-pandemic, the one we all missed. Okay. After that V-shaped recovery, though, this analysis got consistent.
There's been plenty of bullish trades in the last year, right?
And listen, if I identified every trigger from a technical perspective, it would shock most people. It's okay to miss out on this if your goal in life is to capture that.
Yeah, 1,000%. I mean, that's just wisdom.
Yeah,
right there.
And back on Bitcoin for just 1 second to reiterate that point, because Adib asked a question as we were analyzing it. There's a 15-second delay, so we probably already answered it. But he says the question is it a good day to add more in Bitcoin? And Adib, you're a veteran, so I'm going to answer this towards you, but I'll also give an answer towards the beginner as well. Matt, I'd much rather buy it at 42,000 than 39,000 today. 42,000 after a secondary pattern develops, maybe a high base or something else. See, in technical analysis and entries and the way that you map things out, you don't have to chase price action. And, you see the news, you see the Amazon news, you read that shorts covered 950 billion worth of their, or 950 billion worth of their crypto shorts.
You didn't. I get it. We can talk all day long. This did not start a new trend today.
No.
It's just
this is a volatile reaction within a wide range. So it's a positive data point.
Very positive data point.
It makes you sit up in your seat day.
You get interested, but I'm not chasing a 12% price movement that's slightly underneath a major resistance point that has drilled Bitcoin many times in the past.
Yeah.
And once again, I think if you missed from here to here, I think it's okay to wait for it to stabilize above everything here. So
another way to say it all, if the move is real, there's going to be plenty of opportunities along the way.
Yeah, it's great analysis from both of you. I appreciate it. And it is a big, sit up in your seat day for the crypto.
It's a sit up in your seat day, right?
But it's also not real news yet.
No, I like the Amazon.
Okay, rumors. Hold on. You like, say that again.
I said it. The reason I did, I like the Amazon rumors.
They're all right, moving on.
It's not news yet. Yep. All right. Last one here. Let's talk China for just a second. Obviously, there's been a lot of pressure in Chinese stocks and Chinese companies. We've seen the FXI dropping below key support here. I had to pull this back on a 10-year chart and give myself some context here today. Obviously, they've been under pressure for most of the year. And some of this is just on the backs of, stories that have been coming out of China. The DD regulatory problems that company ignored. Chinese regulators came and listed anyway. That started hitting headlines. You also had these education companies. We reported on Friday, actually, in the halftime report, this news that dropped then. It's spilling over into today. They're looking to regulate private education companies to where they are not for profit. And they wanted to kind of assess the rules on that, the way that they approach education and all those things. There's some detail to that story that does matter. But the big question is this move in the broad index in China, Chinese stocks real? And obviously it is very, very bearish. And it's become a stay away for most traders and investors. I even saw, many of the big names in the marketplace right now that used to invest in Chinese stocks, they have less. Kathy Wood, her ARK Innovation Fund, had 8% exposure in Chinese stocks last year. Now it has like 1%. So Matt, what do we make of the story? What do we make of the news? What do we make of what's going on with Chinese stocks right now? Because that weekly chart is not bullish. It is absolutely bearish.
I guess specifically, what specifically is the question though?
What do we do with Chinese stocks right now?
What were we doing with Chinese stocks before today?
Avoiding them.
Okay, then we're going to continue to avoid them.
Yeah.
I guess I'm trying to understand specifically what I'm supposed to say to that.
I don't know either, man. We've been talking about it all day. I'm a stay away from
it. Was a stay away before the news. It's still a stay away.
Yeah. Not make it complicated then.
Okay, every day you've asked me in the last 15 years, whenever you've asked me, what do you put your retirement in, U.S. or China? What's the answer, man?
You say the U.S. every time.
And is that answer going to change throughout my lifetime?
Probably not. No.
So let me just reiterate that you shouldn't have retirement accounts in things that you don't own, such as ADRs that reflect foreign countries. Mm-hmm. No, bet on America the rest of your life. It'll pay you handsomely. Mm-hmm. So I guess, again, I don't know what I'm supposed to say to that question. What to make of the news?
I don't really even know.
Okay, because
I don't know how to answer the question.
Okay, yeah. Because is the question, should education companies be for profit, and should we limit for profit education? Okay, then what specifically then?
All right, so the specific one, I guess, would be Alibaba or FXI.
Okay.
Do you have any interest in them eventually at these depressed levels if you believe in those stocks? Because I still like Alibaba, but it's under so much pressure.
Confidence for me is very important. Mm-hmm. And I have very little confidence in investing in anything that is tied to Chinese-U.S. relationships over the next couple of years, until we get geopolitical clarity on exactly what is happening there. We don't know yet. And so if I gave you the analogy earlier today, and I do not think it's this level, guys. I just gave Tim a historical analogy. I said, I kind of feel like, Tim, you asked me, because he asked me a similar question during the pre-production show. And I said, I kind of feel like that's a question that somebody got in 1946, whether they wanted to invest in a Russian company versus a U.S. company. And I said, you probably should have picked Ford. And if you ask me the question of Amazon versus Bob in 2021, 2 years into a Chinese-U.S. increasing, rhetoric and hypothetical Cold War scenarios, economically Cold War scenarios, then yeah, I'm probably going to say pick Amazon over Alibaba, or whatever the equivalent of that is. You give a Chinese company, I'll give you an American counterpart. it's not even a debate. I would take the American counterpart. We don't have to deal with certain things in the U.S. So again, I guess for me, I just have a hard time understanding exactly what the question here is. If the question is China a stay away right now, I think the technical response over the course of the last 4 or 5 months has proven that to be a resounding yes. China's a stay away.
Yeah, it's been bearish.
That's a break of the 200 weekly. That doesn't happen every day.
On BABA,
anything.
I've had this philosophy on China for 10 years, and it's going to maintain. China, when China sets up, and I'm speaking specifically from market perspective, there's windows where either Europe or China will do amazing. There are pockets of time as a short-term trader where you see things that you just want to take advantage of, and it really doesn't even matter what the instrument is. You're just taking advantage of something you're seeing on a chart. But over the course of time, you will and want to bet on U.S. long-term.
Mm-hmm.
That hasn't changed since I started this business 17 years ago.
No, in fact, even if you just look at long-term charts, I mean, FXI has done nothing for a decade, Matt, literally almost nothing. And S&P 500 is up 450% or whatever the number is in the last
Now,
years.
if the question is, does secondary regulations in China have an impact on U.S.-Chinese regulations and the regulatory status between the two countries and whether or not that impacts foreign investment, I might have a different take on that.
Well, that's what Tim asked.
So again, there's a lot of takes. That's my point.
There's a lot of takes.
Simple take is I'm staying away.
That's an ugly chart, and I'm a big dip buyer, and there's no dip here right now. I mean,
here's the equation. Here's the simple scenario, guys. Any question Tim asked me is going to lead into a political conversation because that's the only thing people are really talking about when it comes to Chinese and U.S. Stocks right now.
Yeah, and that's not really where I want to go.
And that's not really where we want to go at Tackle Trading ever. Leave that for other people.
That's right. All right. Moving on. Let's move into stock talk last here. And just a couple of stories I wanted to highlight. Number one is the busy week of earnings actually has already started off with a couple of names reporting. One very, very big one, Lockheed Martin, juggernaut industrial company, did report their Q2 earnings here this morning. Matt, I got the raw numbers. I don't know if you had a chance to go through this report or not yet. A little gap down. 713 EPS on 17 billion, beat us to expectations.
You didn't think I got the numbers, did you?
Didn't know.
Like,
so I'm just
okay.
reading.
When was we talked about trust and confidence. When was the last time I didn't have the numbers?
I heard you shuffling your papers. I knew you had them.
Thank you. Lockheed came in at 713 versus the expectation of 651. Revenue also topped the expectation by about 100 million there at 17 billion versus the 16.9 billion net expectation. Personally, I have their guidance as affirmed, although we did catch one early this week, guys.
They cheat?
They cheated. They beat in a cheat.
Oh.
And you know what, guys? Every time, this is 4 in a row, beat a cheat. What's the price been? Price response has been down. Lockheed, again, you are not the first company I've had to remind this to. You are just the latest company I've had to remind this to. You can't cheat the algorithms any longer. They've caught up to it. They raised guidance within the range, and it did not help. Price response was down. Beat and a cheat here to start the week out for Lockheed.
Yeah.
And by the way, for those of you new to Tackle Trading, beat is they beat EPS, they beat revenue numbers, but then they try to cheat their guidance, to cheat the algorithms. They get caught, they get busted. Lockheed got caught and busted.
Interesting. And I'm trying to think of all the different price responses we've seen on the beat, and the cheat, and they're pretty much down about 4 or 5%.
The last 2 quarters have been down.
Yeah, it's been down here. The gap down into the 200 here, Matt. There's nothing here technically to trade, right? Yeah, absolutely. Yeah. All right, Tesla, another one here, another quick one, is rumoring they want to build a plant potentially in India. Elon Musk was talking about some of the regulatory problems they've run into in India in the past. He believes some of that will get settled out through EV credits and whatnot. And they were talking and hinting at another production plant in India. We'll see what happens there. Big plans for Tesla all over the world.
That's what Tesla does. They just hunt EV credits around the world.
That's funny, actually. Oh, well, we'll hear a lot more from them after the bell.
Hey, listen, it's a good
big
business
earnings
model,
report
right?
tonight.
Until GM and Ford catch up.
Yeah.
Until all the traditional car manufacturer has to stop paying you those EV credits. But yeah, that's 5 years from now, so we're good now.
Yeah.
Tesla's got a chance over the next 24 hours. Well, they got earnings coming up. They're obviously going to be talking about them hot and heavy tomorrow. So
and it's the price response, right? Like Lockheed, a lot of the cyclical areas, finance, like the price response hasn't been good, but the price response really, I mean, we talked about this the very first of the show. That is going to be, I mean, that's the thing I'm most interested in this week. What is the price response on Tesla? What's the price response on Apple? What's the price response on Microsoft? Fascinated. I'm really, really curious, genuinely curious, because I don't know.
Well,
I have a guess.
Well, think about it for a second. We were talking about tech and the robust quarter it's had from a price response perspective, right? And, we were talking coming into the show today about, what's that one thing, Tim, you asked me the question, what's that one thing we're looking at this week, right? And for me, it's those big five tech earnings, right? Microsoft, Apple, and so on and so forth, because you got to show. You've had great response. You got to show. Can you come through, right? Tesla, which reports first out of all of them, Tesla hasn't had that quarter, guys. Tesla hasn't had that robust quarter where it's went up 30, 40%, and it's got to show me. This is the quarter Tesla's had. A lot of wide range nothingness. A little down, a little up, and I expect some fireworks here, guys. Technically, you're in a scenario where you're looking at a little bit of a triangle formation coming into this very important earnings coming up. It's tonight, right?
Mm-hmm. Tonight.
Tonight.
Yeah.
So you could see some fireworks here. Now, I don't look to the bottom side here at all.
No.
But when I'm looking to the top side here, I see a $700 price point that does look enticing. But even out of that, you're looking at support building and a massive cluster of support right here. Just a cluster of support right here. I think the probability does sign to the top side here. But again, I like a lot of this on Tesla. If we get a positive response here on Tesla, man, we could be looking at this data point on that key metric as the thing that broke this out of this crazy volatile range it's had over the last 3 months.
Real quick, give me the
MMM. Got an opportunity.
What is the MMM on this one? Just curious.
Ooh, should we play the guessing game?
I could try to guess. Yeah, I would play it. So $660. My guess is they're projecting a 5.5% move for Tesla.
I'd say 50 points.
So it's close. It would be close to
38.
45. Yeah. So $40 basically. Let's just call it rounded up $40. $40 gaps you into 700 or just above it, or just down into support. So you got the potential for an out gapping market maker move to gap out of this range. You're in a compressed triangle. I could see action here. It's going to be an interesting one.
Yeah, I think like a lot of things on earnings, though, you're always looking at post-secondary type price movement, and Tesla certainly is going to fit that bill.
Yeah, it's going to be an interesting one. And it is one of those reports. Reading the conference call with Elon is a fun thing to do.
It is fun. I'll wait for Elon on Tesla later tonight.
There you go. Give it some time. All right. That's it from a news perspective. I saw Philip Morris is trying to get out of cigarettes in the UK over the next decade, but they better start transitioning some of what they sell. Obviously, themes and trends are changing. That's what's happening. All right, let's get final thoughts from you boys. Good way to prepare and start the week here. Appreciate all the analysis from today's show. Mark, you first. Final thoughts for the team.
Listen, I don't have time to give any final thoughts. I have to give programming because we got so much going on in our little tackle trading universe. Have a podcast. Going to have Greg Holmes on talking long-term investing. We got Tim and I worked through 10 questions we want to ask Greg, including our own version of buy one, hold one, dump one. That we're going to ask Greg. So I'm looking forward to that interview, Trading Justice breakdown, and you get to hear Matt's joke about Bitcoin and resistance and the parallels to World War II. I'm excited.
There might be some Blitzkrieg commentary.
I'm still I'm such a history nerd. I enjoy that joke and I haven't even heard it yet. But full programming tonight, 7 o'clock Eastern.
Truly,
Onboarding.
Mark. The only question I have is what country do I offend on this one?
I mean, that's the sensibility question.
You know what I'm thinking over here.
I don't care.
Listen, we all know what country we put in our head, right? We all know what country.
I don't think we should play that game. I don't think we should play that game at all.
Listen, I'm going to go get me some French fries.
We all know what country we put in our head, right? But Coach Frank, tonight onboarding, if you're new to tackle trading and want to know about the many features, expanding features every year, it seems, Coach Frank does a masterful job. We do that here on the YouTube channel. And then tonight, we got a couple different programs going on. We have Coach Emily, the Queen, will hold her trading lab. And Coach Greg is going to teach the step system tonight for the mastermind group for step system members. So all kinds of things going on at Tackle Trading today.
Fantastic. Appreciate all the info. And by the way, the events calendar at Tackle Trading is a way to always get organized and up to date on what we're doing over there for our pro members and for anything else that we have planned for the week. Just drop the link to the events calendar. And if you guys are out there watching the show right now, hashtag Team Tackle was on fire today. Love the conversations, guys. Fantastic as always. And if you are not yet a member of our community, you can, number one, join this YouTube channel by subscribing and clicking the bell, or number two, go and join our pro membership and get access to our reports, our weekly premium blogs, our online courses that are a part of the pro membership, not the premium ones. So much more. You'll love it. There's a 15-day trial link in the bottom of every one of our YouTube videos. And Maddie, I'm going to give you the final thought here for the team.
Brussels was the country I was thinking about.
Brussels fries.
Yes. You just thought that they would put up a little bit more resistance. That's all. That's all I'm going to say. Final thoughts. I mean, I have so many questions going into this week. Just a big week from an economic and obviously the central bank. You guys know how much I thoroughly enjoy every central bank announcement these days. But as a student of the central bank, I do love those moments in time, and I do love sitting down and really listening and hearing to what anything that is adding to that inflationary or monetary policy debate that we constantly have here in the U.S. But for me, it's all about earnings this week. And when I'm looking at earnings this week, the first question I have is for the top of the market: can Apple, Microsoft, Amazon, Google, Facebook, can those FANG stocks that Kramer dubbed in 2013 that led the market from 2013? And guys, for those of you newer to the market over the last few years, I don't think you understand the importance of those stocks and what they represented to the S&P for those time periods. When we're looking back over the last few years at the marketplace, let's go back a little bit more in time. Let's see if we can actually go back in time this year. Not on a day chart. I want to get on a weekly chart. In 2013 through 2017 and 18, you see a robust marketplace. But if you looked at every stock in the market, you didn't see this. This is what you saw with the leadership of the market: the Apples, the Microsofts, the Amazons, the Googles, the Facebook. Those big dogs, the Netflix, the Teslas, those big dogs of the world, they just drove the price and carried the entire market on their back for years and years and years. They took a little bit of time off in the middle of the pandemic, but recently they have been flying again. Apple breaking out of all-time highs, Microsoft breaking out of all-time highs. There's not a prettier chart in the market, maybe Domino's weekly chart, than Microsoft. But Amazon recently breaking out of all-time highs against a very consistent 3,500. Don't call it 35,000, Dow, but that's the picture you want to see there. Amazon breaking out of that 3,500 zone just recently. Can these stocks, which have been starting to really kind of be consistent in their price movements to the upside, can they continue that this week? That's an open question I have. But one of the questions I also have, and again, I have a million this week, is towards the semiconductor index. It's kind of been out of favor quietly over the course of the last couple months, and it's got a lot of mixed data. Some clinging on to life support, some fighting up against resistance, a lot of chop. AMD is the latest big name to report here in the semiconductor space. Can a positive response to AMD lift up that sector and start building some momentum in the sector? That's another question I have here this week. So more of those on the podcast. And last thoughts here, we will be recording another edition of the Trading Justice podcast later today. So get excited for that as we release that later on this evening for your listening pleasure.
That's how busy of a week is when AMD's like this 7th stock we list. It's
honestly
it's a busy week.
That's just my personal rankings.
Yeah.
I like. There are 7 other. No, I honestly, if I was being objective, which I'm not on AMD, but if I was, it would not be on the top 10 storylines this week.
It's just a busy week.
It's a very busy week.
All right, guys, we'll be here each and every day to help you navigate it. As always, have a wonderful rest of your day. Join us for other programming here at Tackle Trading, and we're out for today. We're going to go podcast, then we'll be back tomorrow with the halftime report.